Okay guys, going to go to Ask Scruff in the Traders Clinic. Bear with me, we'll just flick this over. It's a very quick and easy question today. There's been a few. I've done the strength for Lee, and what we're looking at now is JB, and noticed a few gaps in the market this morning. Can you give us an idea why they happen and what they mean? They don't mean a great deal anymore. To be honest. So if we just look at my window of the world on this particular screen, what we'll see, just get rid of that, there is some gaps kicking around. I'll use cable as an example, which is here. What essentially it means is there was pre-market activity and it's created a push on the market. Now all that means is across the weekend, so if you flick this down into weekend market, and you'll see there's a few little dots, orders dotted about. Okay, it just means there was an accumulation of pre-market orders, and it balances out between the close of Friday night and the open of Sunday night. So that was the closing price. There's pre-market activity in the middle of here, and it creates a new opening price. Now what you end up having is this island formation. Now what you need to sort of remember now is the markets have changed somewhat. So it doesn't actually mean anything. It just means there was some activity before the markets opened, and then it's opened at the price that was averaged out. Now the way to trade these gaps don't fill as often as they used to. Years and years ago, they would have always filled almost pretty much within a day or so. Now they don't. It's a little bit like all that fair value nonsense. They don't always fill. You can go back in the chart and you'll see hundreds of them, and they don't fill. Similar with these. Gaps do fill, but it's only the natural ebb and flow of the market that fills them. It isn't a conscious decision to slam down into it. So the easiest way to trade it now is get a rectangle, look to see which way it gapped. Well, it gapped up. Just put a green rectangle in like that, and then just treat it as part of market structure, and you'll be fine. Now, if you're trading shares or things like emissions and stuff like that, you'll often see these things gap every single day, and the market doesn't always come back to find them. So create your market structure that way and you'll find it's okay. So it doesn't mean anything really, not anymore. It's just pre-market activity, and it's working out what the average price is between the close and the new cash open. Hope that helps. Catch you soon.